Let's take a look at some information and charts on 1inch for Brave New Coin. So 1inch is a DEX aggregator that will be going, or is already, multi-chain, which is what you want to see for any DEX or any aggregator. Uniswap unlikely to go multi-chain in my opinion. They seem to be on the ETH maxi bandwagon, which is fine. But if you're not the global leader in DEX trading, if you're not Uniswap, you're going to have to compete with everyone else who is going multi-chain, including 0x, including Sushi, including everybody, right? And that's better for the consumer anyway. More competition, more users, more liquidity. The site itself is pretty easy to use. I haven't used it. Well, I have used it a couple times myself, but Matcha has a better looking UI in my opinion, but this is completely adequate as well. Just connect your wallet and off you go. Now Matcha doesn't have a token, obviously. That's exclusive to Matcha. They have ZRX, equally arguably as useless as 1inch. It's tough with these liquidity mining incentives and governance tokens. If nobody cares, then the governance token's not going to matter, right? So, if you're bullish governance tokens, you're bullish on people caring about changing stuff, I guess. You're bullish on pooling and farming, I guess. If we look at the numbers here, it's not pretty for 1inch as far as where the liquidity was and where it is now, mainly due to incentives. I mean, you can see it right here. The earnings dropped, the liquidity dropped, right? Like that's the name of the game. So unless volume picks up or trades pick up, liquidity is going to continue to suffer unless they offer additional liquidity incentives. Liquidity will suffer, and that's just the name of the game. If we enter a multi-year bear market, this stuff's going to go to zero because no one's going to need a DEX aggregator. No one's going to trade on DEXs, So that is also worth keeping in mind. There's a regulatory angle here that's problematic and likely coming in the US as well. So there's all sorts of reasons why this stuff is in trouble in the near term, while at the same time DEXs probably aren't disappearing. I just think it's important to remain realistic here. Now they do have various pools with pretty decent APY aside from the farming stuff, but none of this for the most part is anything that I would want to necessarily be involved in from a volatility risk perspective. There's impermanent loss to deal with here. That's with any AMM. I don't want to sound like I'm picking on 1inch, but all those things are considerations for liquidity mining and liquidity incentives. If we look at the TVL, all the way down to 205 million from 2.5 billion. So quite the journey downward there. Trading volumes picked up despite TVL declining. Trading volumes at all-time highs in May. And maybe there's some metric out there that compares volume to TVL or something like that. That's worth looking at. That wouldn't have helped you here because it would have told you that the ratio is bullish. Volume's high, TVL's low. That's a buy, right? And that didn't work out so well. So just something to consider. But I see a lot of those metrics floating around. In general, though, trading volumes look fine. For a DEX, you want to see what does your transactions and users look like over time? What do volumes look like over time? Are people using the exchange, right? Like that's the bottom line. So transactions are up since April, but down since January, February, March, right? And the same thing with users. As liquidity incentives fall off, you're going to see fewer users, fewer transactions. That's just generally how that stuff works. And if we compare 1inch to Matcha and ZRX, they have roughly equivalent volumes based on the weekly volumes here. Some of this is double counted or triple counted. That's also worth noting, but 1inch leads in the number of traders among non-zero Uniswap DEXs over the past week. Non-Uniswap DEXs, over the past week. So all this stuff is down significantly, right? Since the past few months, past prior month even, we had 150 billion plus in volume last month on DEXs, which is insane. So DEXs aren't going anywhere, but the volumes are probably going to cool off for a little while. And it's obvious that volumes have cooled off because gas prices are essentially zero compared to where they were. The network is a lot less clogged, a lot less activity in general. And if we look at users across the board, Most of it, again, is on Uniswap, but 1inch is generally in the top 5 here, along with Matcha and Sushi. I thought it was interesting in mid-May, Uni had 90% of the total users at that time during that V3 initial switchover. So Uni is definitely dominating most of the volume metrics, transaction metrics, user metrics. They're the one to beat, but heavy is the head that wears the crown. So we'll see if these multi-chain approaches can take a stab at Uni over time, but right now it looks like Uni is definitely by far and away the leader on that. Now, if we look at the 1inch token transaction counts and transaction values, we saw a big spike in transaction values during that all-time high push in mid-May. All that has since cooled down. That could have represented a big whale distribution event. Transaction counts down significantly since February, down significantly since April. So it's certainly hard to be bullish on any chart that looks like that. Here is NVT, which continues to increase. And as an inverse metric of economic utility, can't be bullish on an increasing NVT. And active addresses continue to decline since the initial distribution in December 2020. Since February, since April, again, it's hard to be bullish on anything when you're seeing just continual chunks of active addresses declining over time. So on the fundamental side of things, aside from being a leader in non-uni volume users, that sort of thing, there's very little justification for bullishness on the token, even with Google Trends down from all-time high. This looks like the price chart, right? As it usually does. And I included pre-December 2020. This was the initial token distribution, but this was, maybe some of this was the DEX itself getting searched for. I don't actually know when the date of 1inch got released. First, it was Mooniswap. But the point is here, this is very likely representative of the exchange and not some random word or combination of words. And the searches for 1inch are definitely cooling off. I know something else to mention is that in China, DeFi is taking a hit from a regulatory perspective as well. And that's going to hurt DeFi across the board. Here's the 4-hour 1inch USD chart, and it sold off 70%, 75%, right, with everything else in mid-May. Attempted a bounce, had a decent Adam and Eve setup here, but never quite made it back into this previous consolidation zone. And now is risking just a series of lower lows, down to 250, down to 2, down to 150. Ultimately, probably continues a slow bleed into 120. That's if we see lower lows. So once we do, it's kind of just slam dunk unless you want to be a long-term community member. It's easier for me to sell up here and rebuy once we break out of 120 range in the future, whatever that is, than to just sit in this and hope for the best. It's very clearly not in the 4 to 5 range anymore. And based on volume, most of the support is sub 2. Not quite a bullish divergence yet on RSI, although you could argue for a low time frame bullish divergence. What I want to see here is a multi-day bullish divergence on the 4-hour. And the monthly pivot isn't going to help you because it's all the way down at 65 cents. So not a ton of support here if this does start to sell off. On the 8-hour cloud, it's also bearish. Had a very tiny opportunity here to actually pull back to 455 in that range and started its edge to edge and then just got slammed at $4. So until this is back in the cloud or above the cloud on the 8-hour, it's hard to be bullish on trend based on those metrics. This is 1inch BTC, which was in a massive range since February, and it looks like it's getting ready to break down into the previous range of 3,400 sats. Path of least resistance is going to be down once we break 8K sats. Trend metrics are flipping bearish on the 4-hour. Not quite a bull div just yet. So if anything, you want to see a bull div down to like 5K or less sats, which is likely going to be the case because it's hard to get an RSI to just cruise below 20. And RSI is already below 20. So for me, in a vacuum, sub 5K is what I'd want to pick this up. But right now, this looks like a mess, right? There's no higher highs here, no patterns, no nothing. Just a random walk. And then on 1-inch ETH, it's set up for this beautiful inverted head and shoulders in February, March, April. Actually broke out and probably did hit this zone on a wick or something, but then just got slammed into this slow bleed. And this is what you don't want to sit through. If you are holding on the USD pair, this is what worries me, is the future for all of DeFi, really just a series of lower lows and lower highs over time. Trend metrics still bearish here, no bull div yet. Pivots all the way down at an all-time low. There's just nothing redeeming here for the bullish case on the 1-inch ETH chart. So overall, I wish I had some better news for the 1-inch folk, but nothing here looks bullish on fundamentals or technicals in the near term, at least. Lastly, I'll just mention the ETH-BTC fund and DeFi portfolio that I trade for Techemy Capital on Enzyme.finance. Completely transparent. You can see AUM allocation, all the trades I make through DEXs. I don't think they route through 1-inch just yet, but they plan on adding that, I believe. You can see deposits, withdrawals. You can see in the DeFi portfolio, this is 15 to 20 blue chip DeFi coins. 1-inch is in here at a relatively small allocation, but this is one that I'm ready to cut by the wayside at this point, just because there's very little justification to hold this in the near term. And this whole thing is down 40%, since highs at this point. And eventually just got to cut your losses and look for the next trade, right? And if we make lower lows again, that's it. I'm out. I do like that on Enzyme, you can see everything that I'm doing as far as what I'm trading and when, what I'm trading through and why on the aggregator perspective. So that's all for this one. Like, dislike, comment, share, subscribe, and happy trading.